We've got over 30 analysts tracked right now with revisions since that report, all positive.
The September slowdown may be coming, but the momentum in these stocks isn't stopping.
We've got such an insane spike in the volume. There's no way to think that this stock will not continue to move higher.
MarketBeat's Thomas Hughes is back with his top 5 buys for September.
I mean, there's just really not a lot about this stock that you don't want to buy. I mean, I can't think of a single reason not to buy it.
Will you find a reason to say no to these September stock picks? Let's dive in. Thomas, so great to have you back on the show for one of our favorite segments, talking about your 5 top stock picks with the month ahead. Can't believe it's September already. Let's talk about some of the biggest market movers happening this month before we get into your names.
Well, right. It just looks right now like there's some tailwinds brewing in technology and in the AI complex. That's not just NVIDIA. NVIDIA's results were very strong and affirmed the outlook for spending on AI generally across the AI universe. So what we're really seeing now is spending centered still on NVIDIA, still on infrastructure, but also expanding out to these peripherals. Businesses are starting to lean into the application of AI, and that's heavily data-centric. We're seeing a lot of spending, a lot of positive results from these data companies, along with some other peripherally related companies, but also with some other technologies that are emerging today. And so I think September could be a good month for these stocks.
Yeah, as earnings season wraps up, we have absolutely seen all of the investment coming into AI, into data centers. So it's a good list to look at, and a lot of those names will be making the list this month. Let's get to the first company on your September stock pick list.
Right, that's Snowflake. We've been covering Snowflake, for a while now. Story got interesting last year when they had a CEO change. That change and his work was affirmed over the past few quarters with the results. Results are really accelerating, and this past quarter was a blowout.
Yeah, it's good to see, but that blowout also led to a huge jump in the stock price, up over 20%. Is now a time to get in, or is it just a time to have this one on your watch list?
No, I think now's a good time to get in because what's happening is this market is starting to melt up. There was some serious doubts about the outlook. Those doubts have been laid to rest. The outlook is now improving. So the results, the guidance are leading analysts to lift their targets. They're leading this market. So immediately after the report, there was 12 analyst revisions, all positive. Since then, there have been another 18. We've got over 30 analysts tracked right now with revisions since that report, all positive, either reaffirming targets above the consensus or lifting their targets. They're leading to the high-end range. That's about an 18% upside from the critical resistance level, which will probably be broken very soon if it's not being broken right now.
So there is still some more upside to come, even though this one has had a nice big spike post-earnings. We were talking about this stock even well before this really good earnings report. For those who maybe missed out on some of our previous conversations on Snowflake, what sets this company apart from the competition, and why are we seeing such strong earnings results and strong sentiment from analysts?
Well, it's got a very unique data-centric platform. It's focused on the data lake, which is just all the raw data that a company can generate. But it's got a unified platform, so all of its services are available from a single source. Its services are comprehensive across the data lifecycle. So from the time it's generated to the time you're done with it, which really is never, that data is handled by this platform. Now, the demand outlook for AI capacity is just so great that this company can exist alongside other companies and still have a robust growth outlook because there's just not enough capacity anywhere in the system right now.
Yeah, a lot of really strong sentiment on the horizon for Snowflake. A good first pick. Let's move on to the second name on your list. And this one is a new one we haven't really covered on the show before.
Right. That's MongoDB. We have talked about it, I think, in other segments, other videos. It's certainly been on the radar for the last couple of years. It's kind of parallel to Snowflake. It's a data-centric company. They operate databases, lots of utility for AI application on their platform, but also tools for AI developers. Their Q2 results were very, very strong. Revenue growth doubled versus the last year, accelerating sequentially and versus last year, leading to very strong guidance. Guidance is expecting these trends to continue. So even with this improved guidance, we're kind of expecting performance at the high end or even outperformance because the trends really are showing accelerating use of their platform and deepening penetration of service to its existing clients, which is really a double tailwind for growth and provides a lot of leverage for margins and for earnings.
I think just speaking for the viewers from what we hear in comments so often, I wish you would have told us about this stock before this big spike. We see a 45% spike in the last 5 days. And so what are your thoughts about getting in when it's had such a big run up just recently?
Well, right. So this big giant run up is the market getting back to reality. So the stock price had a big drop earlier in the year because there was just a lot of doubts about, is this company going to be able to perform? Is there really a positive outlook for AI data companies? And so the stock price fell down to the bottom of this range, hit what I see as being a pretty hard floor. And now these results not only affirm the outlook that had been called into question, but improved it. So the market has melted back up to that previous level. I see us now, consolidating, preparing for an even bigger move. So looking at the weekly chart, the stock has moved above the critical resistance level. That's right around $300. That level is now going to be critical support. We've got such an insane spike in the volume. There's no way to think that this stock will not continue to move higher based on this current move, the long-term trading range, moving above critical resistance near the middle of the range. We could get up to 480 or $500 probably, maybe not by the end of this year, but early in next year.
Yeah, that's somewhat close to what the high end of the analyst range are looking at. I think the thing that stands out to me when looking at the analyst targets on this, they're so widespread. The low is at 170, the high at 430. That's a really big range for price targets on this one.
All right. So what we're witnessing right now is a bottom in sentiment and a rebound. So the market was being led lower by analyst sentiment. They've lowered their targets to the low end range, basically. And these results have reinvigorated the bullish sentiment, and now they're lifting them back up. So, maybe not all analysts have adjusted their targets yet. Maybe we're still tracking some targets that are really old and out of date. But looking at the new targets, looking at the new trend, very bullish, definitely leading to the high end range, definitely looking at more upside for this stock. And even taking this back to Snowflake, these markets are in a reversal. So these signals we're seeing aren't just ending a downtrend and creating upside today. They're setting the stage for long-term sustained uptrends based on the growth outlook, the revenue outlook, and the earnings outlook.
Yeah, certainly an uptrend happening right now for this one. All right, a great second pick to look at, Thomas. Let's move on to the third company on your list.
Right. So the third one is GitLab. And this may be like the riskiest of these plays simply because it has not yet released its calendar Q2 earnings report. That's expected, just in the next few days, early on in the month. But it is also a data-centric AI company. It's not the same as MongoDB and Snowflake, where they're like storing data, but this is a DevSecOps platform that's developers secure operations. So it is an online cloud-based platform for developers globally to come together and work on their projects securely. So what it really is an incubator for AI app development, which is closely tied to MongoDB and Snowflake and what they're saying about companies leaning into the application of AI. So what we're expecting with GitLab's report is another very, very strong report. The analysts are looking for 24% YOY growth, but that's a slowdown compared to the previous data, which goes against the data we've seen from MongoDB and for Snowflake. So really, I'm looking for outperformance. I'm looking for significantly strong results, very strong guidance, and a very good potential for this stock to rise sharply the way that these other two stocks have done already.
Yeah, this is absolutely that pick. Looking at the chart, that would be more of if you're looking to get in before a big spike, you have some risk associated with that. But this one is towards the lower end of that 52-week range. It looks like, if we have that earnings report that you are hoping for, that more successful, maybe an earnings beat could lead this one spiking the same way that the last two picks that you had have done. Let's talk about what analysts are saying about this one. How much higher are they expecting it to go?
Analyst sentiment over the last few quarters has weighed on the stock price action, has led to it moving down to the low end of its range. But most recently, within the last few weeks, we've seen some bullish activity, some price target increases, some small upgrades that just show an end to this downtrend. And so what we would expect now, if we get a strong result like what we're looking for, to see the analysts really lean into upgrades and lean into price target increases and reverse that sentiment trend and help launch the stock higher.
What about this company and what they do? The demand that's out there has you confident that we are going to see a stronger earnings report and an uptrend for this stock?
Well, so this is totally anecdotal evidence, but I know someone who is an AI developer. He heads up a program at a publicly traded company, an S&P 500 company, and he says that you can't do AI, you can't develop new product today without GitLab. And so that's just telling me that all the money that's being spent, a fair amount of it's going to be going to GitLab because you have to develop the apps to make the AI really do what we want it to do. And GitLab is where you go to do those things.
I think anecdotal evidence is interesting sometimes about why is there a need for this company and what can move this stock higher in the future. Thanks for sharing that, Thomas. I think that's interesting to look at. I think all of these stocks that are a part of building out AI are going to continue to be huge investment opportunities for retail investors specifically. If you're looking for some other names out there that are essential parts of the AI infrastructure, check out this latest premium article on investing in AI and energy infrastructure with these 5 ETFs. It's a different way rather than picking specific stocks like we're doing here today. You can look at the ETFs in these areas all about the AI and energy build out and the infrastructure. So you can scan the QR code or click the link in the description to get that report for free right now on MarketBeat.com. It's a really interesting list and another way to look at investing in this really booming area right now. All right, Thomas, back to your list. We've had 3 really good AI players so far. Let's get to that 4th company on your list.
Yeah, this is Amprius Technologies, another stock that we've talked about plenty of times. This story really remains unchanged from the last times that we've talked about it. The last report was very good, shows that ramping production is being met by ramping demand. They're growing at a hyper pace. They're expected to accelerate. The order pipeline is growing, applications across industries with their batteries. So we certainly have an expectation for this company to continue growing as it gains new customers and moves into new verticals. The analyst sentiment trends are also very strong. We've got, to me, which is a triple tailwind with coverage increasing, sentiment firming, and the price target rising. So we have more analysts bringing in more investors with a more bullish sentiment and a higher price target. Really is a powerful force for the market. What I'm seeing in the chart, this stock has pulled back from its highs, but it's rebounded. It's consolidating. It looks like it's gearing up for another really solid move higher. And I think that it could easily reclaim the recent highs and then move up to the consensus, which is around $11. But the most recent targets are closer to $18. So if we get up above this critical resistance near the $11 area, we might still see a 50% upside happen rather quickly. And then longer term, I think the outlook for this stock price is even more robust simply because the batteries, higher energy density, so you can put a more powerful battery in a smaller package and get greater range from your vehicles. So there's just no reason for companies that need batteries not to use these batteries. So what I'm seeing here is potential for a really a revolutionary business change as momentum grows and they build out and they continue ramping their production capacity.
I think this one coming up on your list again is a good one to talk about with maybe being patient as an investor. We haven't seen the stock get over that high it hit in July. It's now September, but there is still that super strong analyst sentiment with a lot of upside potential still ahead for this company. For investors who are like, well, when is the stock going to do something? What can we expect on a timeline for a growth company like this? The analyst sentiment is there. When could it actually reach that point?
For the stock price to really begin moving higher, they could release news before the next earnings release that catalyzes the market. But what I'm seeing is the next earnings release, which I believe is due in early November, late October, will affirm the trends, will affirm the robust outlook for growth, will outperform, will come with increased guidance, and that will be a solid catalyst for the market. I think the results will align with the trends, keep the analysts happy, keep playing into this total package story of great technology in production, demand is rising, sales are rising, accelerating growth, hyper growth, positive analyst sentiment trends. I mean, there's just really not a lot about this stock that you don't want to buy. I mean, I can't think of a single reason not to buy it.
The price point is the lowest of what we're talking about of these stocks so far. So it's a really low entry point too. I think that's an interesting thing to look at. I do want to share kind of the devil's advocate side again and just look at a growth company like this that has huge expectation of this is a great idea, this is a great product, it should do well. Have we seen cases where even a really great product and a really great, idea doesn't actually come to fruition? Is that a possibility here, or do you not see that as a possibility for this one?
I think that it was a possibility, but their technology has been proven and they're in production, they're making sales. Unless we get some news where somebody proves that, hey, it's really not working or there's some problem we didn't see before, right now it looks like clear skies for this company.
Very good. Well, thanks for bringing this one onto our radar again, Thomas. And let's get to that fifth and final pick for your September buy list. What's the company you want to talk about last?
Well, right, that's Oklo, and this really ties back into AI and data centers. Oklo is an emerging small modular reactor nuclear company. But what's happened over the last couple of weeks is that it has emerged as the premier choice in nuclear technology today. There are some competitors, and NuScale is got a timeline where it may or will likely be in commercial production, commercial operations before Oklo, but Oklo has an advantage in its visible pipeline. It has signed so many contracts already and is continuing to sign them that it's really garnering analyst attention. Analysts are saying that the pipeline, the visibility of revenue and earnings and profitability is such that they can't ignore it. So they're lifting their targets, they're raising their price target, lifting their sentiment, definitely leading this market into the high-end range. You can totally see their support in the stock price action. Both Oklo and NuScale have pulled back from their recent earnings releases, but NuScale corrected, and it's back down at a low level where it may struggle to get back up to its highs. Oklo corrected, but it was a very shallow correction, looks more like a consolidation. It's already rebounding and on track to make new highs very soon.
Yeah, if you watch our channel regularly, you would have caught that interview we had with the senator talking about how important nuclear is, even to the federal government. They are doing everything they can to help companies just like Oklo. They talk specifically about small nuclear reactors as being kind of the way that they're looking towards growth in this area. So do we see a continued interest and investment happening in nuclear right now, specifically in what Oklo is creating?
Oh, absolutely. Because they're small and they're easy to deploy and they're safer and they're reliable. They're very good for a large number of applications. Data centers are just one where they need to have a reliable, continuous power source. One of Oklo's new deals is a nod from the government for Oklo to co-locate one of its reactors in a government installation and power their operations. So really what I'm seeing here is just increasing demand along with everything else in AI. We've really not plumbed the depth of the demand. It's outstripping supply. And with the progression of AI, the GPUs are only going to get more powerful, all right? And we'll be putting more of them together in the larger data centers. So the power needs are going to grow exponentially over time. So I'm pretty sure that Oklo and other technologies will be required to make it all happen.
Yeah, and I was just about to talk about patience for investors who we've been talking about nuclear for at least a full year now and how much growth we're going to see in this area. And if you're waiting for the growth, well, we've already seen an incredible amount of growth. Looking at how much Oklo has grown just in the last year, how much upside can still be ahead because we've already seen tremendous growth in the year we've been talking about all of the investment coming to nuclear. Well, it's showing up in Oklo's stock price.
The analyst trends are about 15% upside from where we are now, but this is all pricing in the possibility of the future. What we're expecting is for the future to actually be more robust than what the current outlook is. The real headwind for these markets right now is the lack of revenue, so there could be some volatility, but I think over time, this stock would easily double in price and probably more just because of the demand outlook and its ability to turn profits. The profitability is really critical because these companies are expected to begin generating cash flow as soon as they become commercially viable, as soon as they get their first reactors going, and profitability is going to follow quickly after that.
Yeah, it takes a while to get these programs completely launched, and they're not quite there yet, but we're very, very close. I think that leads to a good final point on a September stock pick video, and that's talking about everything that investors are expecting for September and everyone has been waiting for, and that's the potential of a Fed rate cut, not only for Oklo and these nuclear companies trying to get their product commercialized. What kind of an impact could we see on the total market if this does come through in September as expected?
A rate cut, well, it would be a big boost to sentiment. Everybody would feel better. I don't think that the Fed is going to cut very deeply if they do cut. The recent inflation data does not align with rate cuts, nor does the labor data. Wishing for a rate cut is kind of a two-edged sword because we want one to kind of free up the economy. But the way it looks right now, we're only going to get a significant one if there's a recession or some other bad economic data, which really would not be good for stocks. So right now, what I think the best thing that we should be hoping for is that things don't change. Staying the course right now may be the best thing because with the Fed, they're so data dependent, and they're not going to lower rates just because there are economic concerns, they're going to lower rates when the data tells them to do it. And right now the data is not telling them to do it.
Really good point. It will be interesting to see what comes ahead in September. Like you said, there's stuff to look forward to and things that could be concerning too. So it could be a mixed bag. We'll see what the month ahead brings. Thomas, thank you so much for these 5 stocks to watch in September and to look at buying or adding at least to your watch list to see what happens with these stock prices. Thanks again for joining us, everyone. Let us know what you think in the comments. Are any of these names already in your portfolio? Are you looking to add any of them? Or are there some other names that you would suggest to investors to look at adding to their portfolio in September? We'd love to hear your thoughts in the comments. Thanks for watching. As always, happy investing.